Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. Trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Hi, Jim. Yeah, good to be with you and with our listeners.
And Bob, we have at least 3 questions today from listeners. We love to hear from you, by the way. Our first question is from Chris. Hello, Bob. Thank you for being so generous with your research and thinking each and every week. My question, we have not seen a Dow gold ratio of 1-to-1 since 1980. Do you think that this post-bubble contraction will return the markets to a 1-to-1 ratio before it's all over? If not, why not? If so, would you be willing to hazard a guess where that ratio might fall? Thank you very much.
Good question, Chris, but yeah, I don't regularly follow the ratio between Dow and gold, but it did get to that 1-to-1 in 1980. We should recall that was when the stock market was in a horrendous bear market in real terms due to then runaway inflation, which was messing up all kinds of financial assets. And then the most incredible promotion of gold, and particularly silver, then developed in lieu and drove everything to the moon, from which it crashed. So, and then once the gold and silver crashed, then that started this new financial era of inflation and financial assets. Would it happen again? I don't think so. We look at more important, or actually the ones I follow are kind of like the real price of gold, because it reflects operating margins for the gold miners and a few other things. But anyways, I'm very pleased with the question because it reminds of 1980, and one can always enjoys talking about that.
Our next set of questions comes from Mike in Burbank. I have 2 questions for Bob. When is the next likely return of the margin clerks? Also, when will the bond vigilantes return? I can just see them coming over the hill with their torches
yeah.
and pitchforks.
Margin clerks, it was middle of March when we looked and said that things are really dreadful and desperate, and that often severe liquidity crisis in New York can run for 2 months, and that would take it to the end of March, or late in March. So I think the low was March 23rd or something like that. So then we're on a rebound. And when is it going to rebound? Well, we have the old saying, sell in May and go away, which I think is getting towards the time when margin clerks may be there. So let's sort of say on strong market tops like this turned out to be, particularly like the NASDAQ, energies can last for a while. So the quip we came up with the other day was that sometimes May can have 6 or 8 weeks. So it gives us some elbow room on a potential top. And then, let's say after August, then we'll be looking for weaker commodity prices out to the end of the year and that sort of stuff, and recognize that selling pressures can often be discovered in the fall. So I think the margin clerks will be on deck, ready to go in somewhere in the middle of September, where the next decline could get underway. Good question, thanks.
From Kate Bob, your call on the gold miners has been fantastic. However, they seem to be getting a bit overdone in the short term. It was also surprising to see the gold miners and silver and gold itself. In regard to the gold miners, is it time to take a little money off the table, book fantastic profits, and wait for a good correction of the rally off the March lows, assuming the major equity indices double or make new lows later in the year? So, what should they do? Because she likes your calls so far.
Yeah, Kate, you've got an eye on the markets. The sector is getting overbought. It's been some very good rallies. There are some actually outstanding rallies. Now, this is what we want to be careful with. We're in early stages of a long bull market for the sector. So in our view for investors is to buy the dips. And if you're a veteran trader, you can take a little money off the table. But for most people who are not veterans, it's all you can take a little off, but then it's very difficult to get back in. I'm sure we will have a buy at the right time. So I think the answer is also we missed half of the question last one about bond vigilantes.
Yes, and how are the bond vigilantes doing?
This was when Mike asked questions in Burbank. But anyways, Mike, they've not, well, other than in the low-grade sector in the February crash, bond vigilantes have not been present. Every great bubble has been followed by a severe contraction of credit, and the bond markets can get terribly messed up. So I think the vigilantes are around the corner. Now, some people are saying with the Fed recklessness that inflation's going to come back and gold's going to go to 10,000. I don't think so. But what can mess up the markets and raise interest rates for, say, long-dated corporate will be the inability to service that debt, which is typical of the post-bubble condition. So, sorry we had to go back to the other half of the question, and I guess there's one more left.
Yes, from Scott Parker, the question is, financier Jay Gould once said, I can hire one half of the working class to kill the other half. If private bankers succeed in staging World War III, how is Bob's deflation scenario affected?
Yeah, Jay Gould was a very crafty financial operator in the 1860s and 1870s. He learned how to make large money. And as a matter of fact, I got a book here, The Wizard of Wall Street and His Wealth. And it's very sympathetic to him, and it was published, I think, it's 1890. Yeah, published in Chicago, 1892. So for our listeners, Jay Gould is worth reading. I was interested to see this quote, which I don't recall seeing. And it's not private bankers staging a potential World War III. It's been the central bankers, which are essentially controlled by governments or serving governments. And in particular, the Federal Reserve System, it's been staging World War III since 1914. And that's upon private citizens' savings. And eventually the Federal Reserve has become just an agent to confiscate wealth from society through currency depreciation. And the world would be much better off without intervention of central banking.
And Bob, we have another question from Scott Parker. What is it?
Well, this one is really, I'll read it. As a challenge for Bob, I'll eat my sweaty socks if interest rates remain above zero. Will Bob eat his sweaty socks if interest rates go negative? ? Offer expires in 6 months. Scott, this is an incredible question, and there's all kinds of interest rates. So I think the T-bill rate and the Fed rate is going to stay pretty close to zero. And then the riskier stuff, like junk bonds, high yield, they're going to get beat up in price, so the yield is going to soar. And then even it could get bad enough in the bond market whereby long-dated treasuries can get hit. And they have, in the past, had long treasury bond yields increase during a severe deflation. So it's a very fun question, and I don't have to eat sweaty socks ever. But I hope, Scott, we've answered your question. You want to look at the different aspects of the credit markets. Oh, I know, and they also about negative rates. My guess is that in U.S. terms, they may approach, different sectors may approach, longer-term treasuries may approach, no, not zero, but the T-bill rate is going to stay at zero, I think. So there we are. That's one of the most interesting questions we've had.
And if you have to eat them, maybe a little cracked pepper, garlic, and salt.
Steak sauce.
We'll have more with Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Bob Hoye. Bob, one of the headlines that caught your attention this week, Fed policymakers pledge to act as appropriate. What's appropriate?
Appropriate is the old myth, I guess, that the notion that, well, actually, let's go back to the start. Before the Fed was formed, nervous bankers in New York were seeking a way to protect themselves, and because everybody knew then that a financial setback would precede a recession most of the time. So then they came up with this theory that with the Fed as lender of last resort, when it was really needed, they'd come in and bail out whoever needed rescuing, and then there wouldn't be the financial crises that lead to recessions. And it is a very attractive theory, I always say, but then it doesn't work. There's been 18 recessions since the Fed started in 1913, and we're probably looking at number 19 right now with this tremendous collapse of speculation. So but I'm sure that the Fed will act appropriately, and I'm just as confident that, as usual, it won't work. So this remains to be seen, but we're just going to look after our markets as best we can and look for the rallies when we expect them, and if they're overbought, we note that as well, which is the case that's developing now. But yeah, that's mythology, this business about a committee being able to manage an economy.
We'll have more with Bob Hoye right after the break.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Bob Hoye. Bob, another headline that caught your eye this week. As salt of the earth small business owners are marched into jails for violating the coronavirus guidelines, career criminals are now being released from prison so they won't get the virus. And I noted as well, in Saskatchewan, they are detaining people who won't follow the guidelines, and they don't get to have a hearing before a judge to see if their rights have been violated or not. And I joked, well, perhaps that's the only way they can get to, or can keep people in Saskatchewan, is to detain them without any rights.
Yeah. Authoritarians have gone obviously crazy. You've had this case here, the ordinary citizens defying the law, being put in jail. At the same time, they're releasing prisoners from jail to make life better for them. There is a madness out there, but I think that with this setback to the economy, tax revenues to all levels of government will be reduced, and they just won't be able to afford all of this intrusion stuff of for the last 30 years it's been that they can control the weather, and then more recently that they can control a virus, but all they were doing is using it to control people. Nobody is there. There's never been as shocking and straight down hit to employment. And I look back on it, and you can go all the way back. There's been commodity crashes, and there's been financial market crashes and depressions and recessions, but there's nothing ever that fast unless you go back to London in 1665, which was an important trade and financial market, and they got the Black Death, the bubonic plague. It hit, and the death rate was 20%. It's not 20% of those who got the disease. It was 20% of the population in London. So, of course, it came to a shutdown. But at any rate, this whole business of intrusion has created tremendous distortions in the financial markets. And I'm an optimist. I think the public's going to turn against intrusive government and begin to reform it as they did in the early 1600s. And it is going to be very interesting, because when people got power, and they don't give it up easy, so we'll see.
Well, people have said this could be the death of the middle class, all the small and mid-sized business owners and the people who work for them thrown out on their ears, which just leaves the very poor and the very rich.
Oh, yeah. The government, ambitious government these days are pleased to have distress because it makes them more important, and then they got more people they're looking after, and then you've got more people voting for the party that considers it can look after people. But I think we're getting ripe for another phase of the popular uprising, whereby people look at too much in-your-face government and too much in-your-wallet government and simply say enough. And this intrusion with the employing the health scare in order to impose all kinds of restrictions, I think more and more people are going to see through it and realize that it's just a bunch of control freaks using fear to impose yet further authoritarian constraints on society. And of course, the more constraints they put in, the more taxes they want from you. So, anyways, I think it's ending action on the long experiment in authoritarian government.
And we should remind people to listen to This Week in Money on House Street Radio, because we have a great interview with James Corbett, who's doing a documentary on Bill Gates, the owner of Microsoft, and he wonders how, even though Bill says he's giving his money away to charity, how come his wealth has doubled from $50 billion to $100 billion? So that's a very interesting interview, and he has some theories about what's behind the virus panic. Bob, thank you so much for chatting with us.
Yeah, Jim, we've had another fun interval on Friday.
My guest has been market historian Bob Hoye, the chief investment strategist for chartsandmarkets.com. As you've heard, we enjoy receiving your questions at info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.